Welcome back to the deep dive, where we try to cut through all the noise and really deliver the crucial insights you need to stay ahead. Today, we are plunging into a headline that's, well, it's making some serious ripples across both traditional finance and, of course, the crypto world. MicroStrategy, the company that's pretty much synonymous with Bitcoin these days, it's reportedly right on the cusp of joining the S&P 500 index. Okay, so let's unpack this a bit because, this isn't just your everyday stock market listing. It feels like a potentially transformative development. Our mission, really, for this deep dive is to dissect what this actually signifies. For MicroStrategy itself, yeah, but also for Bitcoin and importantly for you. Whether you're an investor actively playing in these markets or maybe just curious, trying to grasp the bigger picture here, we've gathered quite a stack of compelling sources today, market reports, some detailed financial analyses, all to help us illuminate, every facet of this pretty fascinating situation.
Yeah, it really is fascinating. And like you said, this isn't just procedural. It's definitely not a done deal yet either. But the speed, the reported speed at which this could actually happen, we're hearing within days.
Yeah.
That really amplifies its potential significance, doesn't it? It makes this a really crucial moment to understand the implications for capital flows, market sentiment, and just how it might shift perceptions across the whole financial ecosystem.
Absolutely. And before we dive deeper into all of that, just a quick but really important note. If you're finding this deep dive valuable, or, if you just appreciate the effort we put into bringing you these kinds of analyses, please take a second to hit like, subscribe, and maybe that notification bell too. Honestly, your engagement, it really helps our channel grow. It boosts visibility in the algorithm. And, well, fundamentally, it lets us keep making this type of quality, in-depth crypto content for you. We genuinely appreciate the support.
It really does make a difference.
Okay, so let's kick things off with that headline, the one that's got everyone buzzing. From Wall Street suits to crypto Twitter, MicroStrategy, ticker MSTR, reportedly being actively considered for inclusion in the S&P 500. And like you just mentioned, the really intriguing part isn't just the consideration, it's the timeline. We're hearing this could wrap up within days, pending the S&P Dow Jones Indices Committee approval. That seems incredibly fast for something this big, wouldn't you say?
It's unusually swift, yeah.
Yeah.
Which might suggest, how relevant the market currently sees MicroStrategy. And for listeners maybe less familiar, the S&P 500, it's the benchmark, right?
Right.
The big one for large cap U.S. stocks. It's not just some index. It's the 500 largest U.S. public companies by market cap.
Yeah.
It's basically the barometer for the stock market, maybe even the U.S. economy to some extent.
Right.
So getting included, that's a huge stamp. Financial robustness, profitability, market influence, and it signals you've truly arrived.
Totally. A real heavyweight status symbol. And when you think about MicroStrategy specifically, well, it immediately clicks why this news is causing such a stir, especially in the crypto community. The company over the last few years has very deliberately, very consistently become what everyone calls a Bitcoin proxy stock. For a lot of people, MSTR is the way they get Bitcoin exposure through their regular brokerage account.
Oh, absolutely. That label is completely earned. It comes straight from Michael Saylor's very explicit corporate strategy. MicroStrategy has been on this relentless mission, really, to just stack Bitcoin, make it their primary treasury reserve asset. And their holdings are, well, they're massive, over 200,000 BTC now. Think about that. At current prices, that's billions and billions of dollars in digital assets sitting on their balance sheet. This huge Bitcoin stash means, by design, the stock's performance is just deeply tied to Bitcoin's price swings. So yeah, investing in MSTR gives traditional investors this unique, pretty direct way to get Bitcoin exposure, all within that familiar, regulated stock market framework. It's a bold strategy, no doubt.
So it's fair to say its identity has fundamentally shifted, right? It's not just a software company anymore in the market's eyes. It's basically become this, like, Bitcoin investment vehicle with a software business attached. Now, for people wondering how you actually get into this exclusive club, the S&P 500, it's not just about hitting a certain market cap number, is it? There's more to it.
Exactly. The S&P Dow Jones methodology is pretty rigorous. It's multifaceted. Inclusion isn't automatic just because you get big enough. There's a detailed review by an independent committee. They look at a whole bunch of criteria. Things like market cap, yes, but also liquidity, sustained profitability. Typically, they want 4 straight quarters of positive GAAP earnings, public float, sector balance, where the company is based. The committee's job is to make sure the index stays a true representative benchmark of the leading U.S. companies. So for a company like MicroStrategy, with such a, let's say, unconventional balance sheet strategy heavily weighted towards a volatile asset like Bitcoin, this review isn't just a rubber stamp, it's a considered decision. They have to weigh how this unique treasury approach fits with the index's criteria for stability and representation. which again makes that within days timeline seem even more interesting. Suggests maybe a lot of the homework's already been done behind the scenes.
Right, that rapid timeline, given the rigorous process, really underscores the potential significance here. It suggests the committee might be comfortable with this unique strategy. And that, I think, is where we unlock the real why it matters. The big shifts this could trigger, starting with institutional money, this is where it gets really interesting.
Yeah, this is foundational, absolutely key to understanding the ripple effects. If MicroStrategy gets added to the S&P 500, it triggers something called mandated buying. This isn't about people choosing to buy MSTR. It's systemic. It's mechanical. Think about all those huge index funds, passive ETFs, big pension funds. Their whole job, often legally required, is to track the S&P 500 precisely. They don't get a choice. If MSTR is in the index, they must buy the shares to match the index's makeup. We're talking trillions of dollars managed by these passive funds. And when they rebalance, it's not a maybe, it's a must-do. This structural demand can create just immense guaranteed buying pressure on a stock, potentially moving the price quite a bit as they all adjust their portfolios.
Okay, that clarifies the mechanics perfectly. It's not a suggestion, it's a requirement for these giant funds. And what that means, effectively, is that these massive, often conservative funds will suddenly be holding Bitcoin exposure without directly buying BTC themselves. That's a pretty clever workaround, isn't it, for institutions that might otherwise be blocked?
The implications there are, well, they're profound. Really hard to overstate. So many institutional investors, pensions, endowments, wealth managers, even other corporate treasuries operate under really strict rules. Investment mandates, regulations, internal compliance, things that just flat out prevent them buying crypto directly. MicroStrategy joining the S&P 500 basically offers them this perfectly compliant pathway, a sort of backdoor into the Bitcoin market. They get exposure to Bitcoin's ups and downs through a regular stock, bypassing all the headaches of direct custody, tricky regulations, internal policy fights. If you connect that to the bigger picture, this could really start to normalize Bitcoin's presence in these super conservative traditional portfolios, not because they chose it, but because they had to buy MSTR. It's like legitimization by proxy, and that could spark some serious conversations inside institutions that have just ignored crypto up until now.
It's a strategic masterstroke by MicroStrategy, really. And like you said, it frames this potential inclusion as a genuine milestone for Bitcoin's integration into traditional finance. This goes way beyond just MSTR, the company.
Precisely. When a company whose core strategy, whose whole narrative now, is so deeply and openly tied to Bitcoin gets into the benchmark index, that sends a powerful message. It validates Bitcoin, not just as some speculative gamble, but as a potentially legitimate treasury asset, a viable long-term investment that really reinforces its status in the eyes of, TradFi, the established financial world. For Bitcoin, this isn't just a quiet nod. It's a very public acknowledgement of its growing relevance within the global financial system. It basically tells Wall Street, look, a company whose value is heavily linked to Bitcoin is now good enough for the S&P 500. That subtly shifts the risk calculation for other corporate treasurers, for portfolio managers watching this unfold, doesn't it? So for you listening, what really stands out about this sort of quiet but powerful legitimization? Does it change how you see Bitcoin's future, even slightly?
That's a great question, because perception does drive capital flow. And speaking of capital, let's pivot now to the immediate impact across the financial landscape. Who stands to gain? Who's watching this most closely? First, let's talk equity investors. People holding MSTR are thinking about it. We can probably expect a pretty immediate, pretty substantial impact there, right? MSTR stock could see a major demand spike from passive inflows.
Yeah, demand spike isn't hyperbole here. It's almost a mechanical certainty. When we talk passive inflows, we mean that systematic, non-discretionary buying from all those index funds and ETFs mirroring the S&P 500. Analysts are already throwing numbers around, potentially $5 billion to $10 billion flowing into MSTR shares just from this inclusion. That's based on its expected weight in the index and the sheer amount of money tracking the S&P. And again, this isn't about analysts liking the stock. It's about funds having to buy it to maintain their tracking accuracy. This guaranteed huge wave of demand could put significant upward pressure on MSTR's share price as these funds rebalance. It's unique structural tailwind you only get from index inclusion.
Okay. And shifting gears to the crypto side, for Bitcoin holders, for crypto investors in general, this surely has to be seen as a fundamentally bullish signal for Bitcoin adoption.
Oh, absolutely. From a crypto investor perspective, this is undeniably bullish. It signals increasing mainstream acceptance loud and clear. It translates directly to more institutional money tied to BTC performance. Even though these funds aren't buying Bitcoin directly, their required purchases of MSTR mean a big chunk of their capital is now implicitly linked to how Bitcoin performs. This indirect inflow strengthens Bitcoin's whole ecosystem. It shows growing confidence in its long-term value within established financial frameworks. It's just another layer of validation. Gradually lowers that perceived risk, paves the way for maybe even deeper integrations later on. So for our listeners, what do you think? Will adding MSTR to the S&P 500 actually pump Bitcoin's price directly, or is the impact more subtle, more about reinforcing its legitimacy over time?
That's a really good question. The answer probably depends if you're trading hourly charts or thinking in years. Now, what about the active players? The traders always looking for an edge. This situation must create some potential for arbitrage opportunities between MSTR and Bitcoin itself.
It certainly does, especially given how tightly MSTR and Bitcoin have historically moved together. Traders watch these correlations like hawks, and MicroStrategy's stock and Bitcoin have shown these near lockstep movements for ages now. Our analysis shows MSTR's 90-day rolling correlation to Bitcoin often stays above 0.85. That's remarkably high for a company that isn't, strictly an asset manager. So, arbitrage here would mean trying to exploit any temporary price gaps that might pop up between MSTR's stock and Bitcoin's price, particularly during volatile periods or right after big news like this. Like if MSTR stock jumps way faster than Bitcoin after the S&P news, or maybe lags behind, traders might buy one and sell the other, bidding they'll snap back into alignment. Index inclusion could maybe even amplify these correlations short-term, or perhaps introduce weird new dynamics as the market digests it all. Traders will definitely be looking to play those angles.
Right. So it brings up another question for the audience, maybe. Would you rather hold MSTR stock as that Bitcoin proxy, getting the S&P bump maybe, dealing with the equity structure, or just hold BTC directly, control the actual keys? What are the trade-offs you'd weigh up? Custody, volatility, regulation?
That's the core dilemma for many, isn't it? Proxy versus the real thing.
Okay, stepping back a bit from the immediate market moves, this event seems to have much broader implications for the whole digital asset space, Web3. It really paints a picture of Bitcoin getting embedded deeper into traditional finance portfolios.
That's a crucial point. This isn't just about MSTR or today's Bitcoin price. It's a marker for how institutional capital sees and interacts with digital assets generally. Having a company so heavily invested in Bitcoin join such a critical index, well, it effectively lowers the perceived risk of crypto-linked assets within TradFi. It kind of normalizes the idea of having significant Bitcoin exposure within a respected mainstream stock. It provides this very visible, real-world example of how these assets can exist, even thrive, inside established indices. And that could pave the way for more direct institutional crypto adoption later on. It's a key step, really, in bridging that gap between the old financial world and the innovation happening in Web3.
So what does this signal to other companies then? If MicroStrategy pulls this off, could it actually encourage other corporations to adopt Bitcoin as a treasury asset? It feels like it could set a really powerful precedent.
It absolutely could, and I think it probably will to some extent. MicroStrategy has really been the pioneer here, showing this deep conviction in Bitcoin at the corporate level. By successfully navigating this whole path from aggressively stacking sats to potentially landing in the S&P 500 MSTR because this incredibly powerful case study, visible to every corporate finance department globally. It offers tangible proof that this strategy can be done, can lead to market relevance, a strong balance sheet, and critically, can gain acceptance from the gatekeepers of traditional finance. This could definitely encourage other companies that have been watching, maybe feeling hesitant about the risks or the regulatory gray areas, to now seriously reconsider adding Bitcoin to their own balance sheets. The whole narrative around Bitcoin as a legitimate corporate reserve asset just gets a major boost.
Right. So the question for you listening is, if MicroStrategy joins the S&P 500, do we see a domino effect? Other big companies following suit? Or is MSTR just, a unique case, an anomaly?
That's the multi-billion-dollar question, yeah.
And it kind of leads us to an even bigger, more forward-looking question, maybe a bit provocative. Does this spark the question? Will Bitcoin itself one day be packaged into indices beyond just ETFs, becoming a true macro asset class?
If we really connect the dots here, looking at the bigger trajectory, MSTR's potential inclusion feels like a significant step on that very path. Now, for Bitcoin to become a true macro asset class, sitting alongside gold, major currencies, bonds, and those big global indices, a lot more would need to have, obviously, we'd need much broader global regulatory clarity, way deeper institutional liquidity, a more mature derivatives market everywhere, maybe even some central banks or sovereign wealth funds accepting it as a reserve asset. That's a long road. But every single step, launching the spot ETFs, major banks getting involved, now potentially MSTR and the S&P 500, it all incrementally moves us closer to that reality. It signals this growing, undeniable recognition of Bitcoin's permanence and importance. So yeah, begs the question, is this whole MSTR S&P thing like a Trojan horse? A clever way to get deeper Bitcoin adoption into Wall Street portfolios, just disguised as a tech stock inclusion?
A Trojan horse. Interesting way to put it. To really get a handle on the potential significance here, it helps to look back, right? Look at some historical parallels, case studies. This isn't happening in a vacuum. Let's start with a big one that really shifted the corporate mindset. Tesla's Bitcoin buy back in 2021.
Oh, that was absolutely a watershed moment. It fundamentally changed how corporate treasurers viewed Bitcoin. When Tesla announced in early 2021 they'd bought, what was it, $1.5 billion worth of Bitcoin for their balance sheet. That signaled corporate adoption on a scale we hadn't seen before. Coming from a tech giant led by Elon Musk, it spiked BTC's price immediately, like over 15%, and really helped fuel that bull run. It showed the market reacted incredibly positively to big companies embracing Bitcoin.
Yeah.
It wasn't just the purchase, it was the endorsement. It laid crucial groundwork for the idea that Bitcoin could be a legitimate forward-thinking treasury asset, a narrative MSTR then took and ran with even more aggressively.
And it's not just companies. We've seen adoption at the nation-state level, too, with
Right.
El Salvador's Bitcoin reserves.
Right. El Salvador's move in 2021, making Bitcoin legal tender and adding it to their national treasury. That offers a fascinating, though very different parallel. A nation-state level adoption compared to MicroStrategy's corporate strategy. Totally different scales, different implications, obviously. But both show Bitcoin being integrated into official financial structures. El Salvador's decision, controversial as it was, showed a sovereign nation betting on Bitcoin long-term. It's this bold, top-down approach that contrasts with MSTR's bottom-up corporate conviction, but both kind of reinforce this growing belief in Bitcoin's utility beyond just individual investors.
Another really key development, one that meticulously built a bridge between TradFi and Bitcoin, was that whole saga around the Grayscale Bitcoin Trust converting to an ETF.
Oh yeah, that was a marathon. And it really was another crucial pathway, bridging TradFi and BTC. For years, GPTC was one of the only games in town for getting Bitcoin exposure in a brokerage account. But it had issues, right? The premium discount swings. That long, multi-year fight legal battles, regulatory hurdles to finally get it converted into a spot Bitcoin ETF, which happened early 2024. That just showed the immense pent-up demand from traditional investors. They wanted regulated, easy, efficient ways to get direct Bitcoin exposure. Its success really highlighted how the mechanisms are evolving, moving from these clunky trusts to familiar ETFs, further mainstreaming Bitcoin and opening the door for all the other spot ETFs that followed.
And just to understand the raw power, the mechanics of S&P 500 inclusion itself, we
Right.
can look at NVIDIA and the S&P 500 as a pretty potent historical example, right?
NVIDIA is a great example, yeah. Especially its performance. After joining the S&P 500 back in, I think it was 2008, it really showed how one company's entry into the index can ignite significant buying pressure and narrative momentum. NVIDIA was already doing well, but joining the index didn't just bring in those passive fund dollars. It also meant more analyst coverage, more media attention. It solidified its place in institutional portfolios. That led to a much broader investor base, which definitely contributed to its massive share price appreciation over the years and reinforced its story as a leading tech innovator. It's a direct, powerful comparison for the kind of multi-layered impact MSTR might experience way beyond just the initial forced buying into that broader market sentiment shift.
Right. And finally, thinking about a crypto-native company making big strides into traditional finance, we can remember the huge buzz around the Coinbase IPO.
The Coinbase direct listing in April 2021. Yeah, that was a landmark for the whole crypto industry. It was a crypto-native company entering traditional equity markets directly on NASDAQ. And it provided a similar legitimacy boost in perception to what MSTR's S&P inclusion could do for Bitcoin's image. Coinbase going public showed that a company built entirely around crypto could achieve mainstream financial acceptance, get a huge valuation, and operate within the strict rules of public markets. It kind of normalized the idea of public companies thriving in the crypto space, and it definitely attracted a new wave of traditional investors who maybe wouldn't have touched crypto otherwise.
Okay, so lots of interesting parallels there. Now let's really dig into the data, the analysis that backs all this up. It helps ground the discussion in some tangible metrics and projections. First up, let's revisit that MSTR stock versus BTC price correlation. We keep saying near lockstep movements, but what do the actual numbers show?
Yeah, this correlation isn't just talk, it's statistically incredibly strong. It's really the bedrock of MSTR's pitch as a Bitcoin proxy. Our analysis consistently shows these near lockstep movements. If you look at, say, the 90-day rolling correlation coefficient over the past year or 18 months, it's frequently been between 0.85 and 0.95. I mean, a perfect correlation is 1.0. So that's incredibly high. Way higher than most tech stocks correlate with the S&P 500, or even compared to many Bitcoin mining stocks. This tight link basically means MSTR stock acts like a leverage play on Bitcoin. It reacts almost identically, sometimes even amplifying Bitcoin swings. So for investors, yeah, holding MSTR is, to a large degree, participating directly in Bitcoin's price action, just inside a stock wrapper. The really interesting question now is, will S&P 500 inclusion maybe strengthen that correlation even more because of the added institutional buying? Or could it introduce new factors? Maybe MSTR starts to develop its own S&P 500 narrative, slightly diversifying away from just Bitcoin. We'll have to watch that closely.
Right. And when we talk about that forced buying from index inclusion, the scale is just huge. What are the estimated index inflows we could realistically expect? You mentioned billions earlier. Like, how many billions could flow into MSTR?
Yeah, the estimates are genuinely substantial. The consensus seems to be somewhere in the range of $5 billion to $10 billion.
Oh, yeah.
That number comes from looking at MSTR's current market cap, figuring out its likely weighting in the S&P 500 based on its size, and then applying that percentage to the massive amount of assets under management, the EUM, in passive funds that track the index. And just to stress again, this isn't discretionary money. This is systematic buying from the biggest asset managers on the planet. That kind of inflow, that magnitude, would mean significant potential market cap shifts for MSTR. It would absorb a huge chunk of its available shares and represents this immense wave of passive buying pressure. It's not about convincing Vanguard or BlackRock to buy. It's about their mandate. They have to buy to replicate the index. That mechanical pressure is what makes index inclusion so powerful, often so immediately.
So, okay, MSTR gets in. Where does it actually land within the S&P 500, sector-wise? Is it purely technology because of its software history, or does that massive Bitcoin pile push it towards financials?
That's a really interesting question. And the sector classification actually matters quite a bit, both symbolically and practically. Historically, yeah, MSTR has been filed under information technology, specifically software and services. That's its roots. But its huge Bitcoin treasury, which arguably drives most of its valuation and market attention now, creates this fascinating wrinkle. Will the S&P committee see it as mainly a software company that just happens to have a weird treasury strategy? Keep it intact. Or does its almost singular focus on acquiring Bitcoin, basically acting like a holding company for a digital asset, push it toward financials? Maybe some kind of specialized investment services category, or even a new digital assets subsector down the line. It matters because different sector funds and ETFs would treat it differently. Different analysts would cover it. It changes how investors might categorize it. It's a real challenge to the old classification systems, honestly. Reflects how corporate strategy is evolving.
Right. And speaking of that Bitcoin treasury, let's talk raw numbers and the strategy. The on-chain BTC holdings by MSTR are public knowledge, constantly updated. It's such a unique approach for a public company.
It really is. Their holdings are remarkably transparent, tracked meticulously by blockchain analysts. They started this whole Bitcoin strategy back in August 2020, remember? And since then, they've just consistently bought more, often using debt, like convertible notes, or issuing more stock to finance the purchases. And if you analyze their current valuation versus entry price, well, it highlights their balance sheet strength, especially when Bitcoin is rallying. With over 200,000 BTC bought at an average price way below where Bitcoin is now, their paper gains run into the billions. That significantly boosts their overall assets. This strategy shows more than just a bullish bet. It shows this deep, long-term conviction in Bitcoin as a superior treasury reserve asset compared to cash or bonds. They aren't just holding Bitcoin. They're defining their company's value and market strategy by it. It's a unique financial structure very few others have dared to copy at this scale.
Okay, and finally, let's look at past patterns again. The numbers around S&P 500 inclusion itself. Historic stock performance of companies before and after joining the S&P 500. What does history suggest might happen to MSTR's price?
Well, looking at those historic examples, there's a pretty general, often observable pattern. Companies tend to see their stock price drift upwards in the period leading up to the announcement, and then immediately following the actual S&P 500 inclusion. This effect, sometimes called the S&P bump, seems driven first by traders anticipating the news, and then by the actual massive passive inflows from the index funds kicking in. Studies suggest this bump can be anywhere from, say, 5% to 15% in the short term. And some companies see sustained gains afterwards too, as they get more institutional visibility and analyst coverage. So that provides a kind of baseline projection for potential short-term, maybe even longer-term price action for MSTR. But, and this is a big but, it raises that crucial question again. Will MSTR's completely unique Bitcoin treasury, its super high correlation to a volatile asset like Bitcoin, make its post-inclusion performance totally different? An outlier compared to typical S&P additions? Will its built-in Bitcoin volatility mean it follows a path unlike, say, a normal industrial company or a retail stock joining the index? Could it see even bigger swings, both up and down?
That's definitely something the market will be watching very, very closely.
Okay, so wrapping this all up, what does this really mean at the end of the day? For the financial world, for your understanding of these markets, we've taken a pretty deep dive into MicroStrategy's potential S&P 500 inclusion, trying to uncover all these profound implications for institutional Bitcoin exposure, for Bitcoin's legitimacy, and just for this broader convergence of traditional finance and decentralized finance.
Yeah, what's really fascinating here, I think, is that this story goes way beyond just one company, one stock ticker.
Yeah.
It really acts as this powerful barometer, doesn't it? For Bitcoin, the whole journey into the financial mainstream. It signals a pretty significant, maybe undeniable shift in how major financial players are starting to interact with the digital asset landscape. It's kind of a testament to critical thinking, to strategic innovation, and maybe the need to adapt to new realities in this incredibly fast-moving financial world.
Exactly. And this really leaves us with a provocative thought, something for you to mull over after this deep dive. Will MicroStrategy cracking the S&P 500 truly open the floodgates? Will we see widespread corporate Bitcoin adoption, making it a standard treasury asset? Or is this just the first, maybe strategic ripple of a much larger, much more integrated financial future where digital assets just play a fundamental, undeniable role? And maybe more personally, what implications does this single event have for your portfolio strategy? For your basic understanding of where finance is actually heading? Lots to think about. Thank you so much for joining us on this deep dive today. We really hope it's given you some invaluable insights into this rapidly evolving and pretty important story. And remember, please do engage with us, like, subscribe, share it if you found it useful. It really helps us keep bringing you this kind of quality crypto content and in-depth analysis. We appreciate you tuning in.